What do Donald Trump's tariffs mean for investors? Here in 2025, if you have a retirement portfolio or significant investments, Trump's new tariffs are going to impact your money. And whether you realize it or not, these policies could reshape markets, inflation, the overall economy, especially for retirees. Now, the question is, are your investments positioned to survive or even thrive under these conditions? So stick with me today as we break down and discuss how to align your money with your values in this new economic reality. Hey everybody, I'm Eric Rodriguez again, certified financial planner, fiduciary, and someone who believes that your money should reflect your values. I help retirees and soon-to-be retirees make smart financial decisions without all the Wall Street BS. So today we're going to be diving into what Trump's tariffs mean for investors like you. And one of the big financial stories following the presidential election is the potential for increased tariffs on goods produced outside of the US. And I get it. This kind of economic policy, it makes a lot of headlines, and a lot of investors like you might be wondering, what does it mean for the markets? Are stocks going to crash? Will inflation spike again? Should you be shifting your portfolio around? Let's take a look at what history tells us. So the last time Trump imposed tariffs, so this was back in his first administration in 2018, markets went through some crazy volatility, but ultimately they still grew. In fact, let's look at the numbers from Trump's first term. So if you had invested $1 at the start of Trump's presidency, here's what would have happened by the time he left office. So if you would have invested $1 into China's MSCI index, that $1 would have doubled. It would have grown to $2. The S&P 500, if you would have invested there, your $1 would have grown to $1.81. Now, international developed markets, basically the entire world, excluding United States and China, that $1 would have grown to $1.41. So despite all the tariff drama, the market still moved forward. And you might be asking, well, why? Well, that's because markets are forward looking. So when you look at the economic impact of things like tariffs, tariffs often get priced in before they even happen. So by the time these policies hit, the actual market reaction may be more muted than expected. Don't get me wrong, just because markets survive doesn't mean there aren't risks. So let's break down what these tariffs actually mean for you as an investor here in 2025 and beyond. So I think it's important to define what are Trump's tariffs and who pays the price. So let's get one thing very, very straight. Tariffs are taxes. And while Trump sells them as a way to punish China or protect US jobs, the reality is that you, the American consumer and the investor, you're the one footing the bill. And here's why. Tariffs increase the cost of imports, meaning you are going to pay more for goods like cars, electronics, and groceries. Businesses facing higher costs, they pass them to consumers. And that ultimately is going to drive up inflation, which disproportionately hurts retirees that are on a fixed income. Now, when you look at companies that are impacted by tariffs, what they do is they often slash jobs, they cut spending, and slow down growth, affecting corporate profits and ultimately the stock market. So if you're retired or nearing retirement, this is not the kind of economic uncertainty you want to deal with. Let's jump to how tariffs impact your retirement investments. Markets don't like uncertainty, and tariffs create a lot of it. So historically, here's what happens when tariffs get slapped on the table. Stock market volatility spikes as investors react to trade disputes. So sectors like tech, consumer goods, and manufacturing, they all take a hit. So if you're heavily invested in these areas, you better expect some turbulence. Then when we look at bonds, bond yields may shift as the Fed reacts to inflation caused by tariffs, affecting how much you earn on so-called safe investments. So for retirees, this means you have to be more strategic than ever with your portfolio. So the days of set it and forget it investing are long gone. Let's talk about now who wins and who loses with these tariffs and these policies. So let's first look at the winners and losers, because tariffs don't hit everyone the same way. So let's look at winners first. US companies, protected industries like steel and domestic manufacturing, they can see short-term gains. Defense and infrastructure companies that benefit from company spending could do well. And Trump's political base may love this move, but let's be clear, it doesn't mean the economy is actually winning. So who are the losers? Well, you as the consumer are the loser, because tariffs equals higher prices. We have to pay more. Retirees are also a likely loser, because inflation eats into fixed incomes and market swings threaten your retirement security. Also, export heavy US companies, because when other countries retaliate, which a lot of them said they will, and some of them already have in Canada and Mexico, they're going to retaliate with their own tariffs. American businesses will suffer with that. And let's be real, if manufacturing does come back to the US, it will, but without strong climate initiatives. So we could actually see more pollution and environmental damage. What could you do about this? So what's the move? How do you protect your portfolio? How should you be thinking about your investments, etc.? Well, first thing is you want to diversify globally. So US stocks won't always be the best bet. So you want to consider global markets that may be less impacted by tariffs. The next thing is you want to invest with your values. So if you don't want your money funding policies you disagree with, now is the time to align your portfolio with socially responsible investments. The next thing is tax planning matters more than ever. So tariffs and inflation can trigger policy changes. So you want to have a tax efficient strategy so you're not giving away more money than necessary. Next thing is you want to hold more cash or have low volatility assets, because if tariffs shake the market, you want to be ready to buy opportunities, not forced to sell in a downturn. So this is why, in my opinion, whether it's me or another fee-only fiduciary, working with somebody that helps you make smart, values-aligned decisions without pushing products or corporate interests is so important, because it can really help you be impactful with your overall financial strategy. Here's my question for you. Are your investments positioned to handle what's coming? And even more importantly, do they reflect what you stand for? Let's talk. I help retirees build financial strategies that work for them and their values and their beliefs, not Wall Street, not political games, and definitely not fear-based decision-making. So if you need help figuring this out, I offer a comprehensive free initial call. You can book it directly on my website. There's a link there, but we can get your money working in a way that helps you secure your future and aligns with your values. So if you found this video helpful, go ahead and hit that like button, subscribe for more financial insights, drop a comment below. I'm curious, do you think these tariffs will hurt or help the economy? Thanks so much for listening. Until then, invest wisely and stay true to your values. Talk to you soon. Cheers.